That's it. Let's move right into the Queen's Court. This was something we do each and every Tuesday, and the Queen is going to be holding court again for us today. The coaches here at Tackle Trading, we all find a trade or an investment idea, something either swing trade, position trade along those lines. We bring it to the Queen and submit it as our pick of the week, our idea of the week, and then she gets to decide if it's good enough or not. And if it's not, we get our heads chopped off. Queen Emily, where do you want to start here today?
Oh, well, I chopped your head off last week. So let's go with Mark and let's hear what Mark has to say. I'm sure Mark has some very, very interesting stuff that he's been looking at this week. And I kind of have an idea of where he's going to go, but I'd love to hear what he's got to say.
Yeah, I mean, listen, everyone's heard me talk about movie theaters to the point where you probably don't even hear what I say anymore because you're just like, I don't know, Mark's talking on movie theaters. Let me go do the dishes. Let me go do something else. But man, it's a hard press to find a hotter area of the market right now than movie theaters, and with good reasons. Once again, I mean, there was this worry the entire time, and my pick's going to be IMAX, IMAX. There's been so mmany walls of worry in movie theaters. One, are movie theaters dead? Will people go back to them? And then an even bigger wall of worry. Are all of these streaming platforms, are they dead because we're just going to release original content? Well, a few weeks ago, Disney said that they're releasing all theatrical releases directly to theaters, not on Disney Plus. They'll come to Disney Plus later. And then you have just had outstanding numbers. I mean, this is a real genuine shift in not my sentiment, in everyone's sentiment. It's like, these stocks are beat up. There's a lot of catch up, and holy cow, are they putting out huge numbers. Venom this last weekend, just amazing numbers. The James Bond new film internationally, which gets debuted this week in America, 110 million worldwide. It's going to be fascinating to what it sees. 1 million catalysts. IMAX itself said it did more business this past weekend than any week in the history in the month of October. Not a strong seasonality month, but what is strong is just the desire. My favorite quote this weekend was, an analyst that says, "I think the premature death of movie theaters is premature." And I think that's the case. And what I like, and obviously we're dealing with strong momentum here, but you're also dealing from a long term. A lot of catching up to the chart. I mean, this has been a sentiment thing for years now. Movie theaters are dead, pandemic. You got a lot of catching up to do. I like IMAX strength. Whenever a company comes out and says we are doing robust business, I think you need to pay attention to what they're saying. I think there's a lot of room on the chart here. I think you're looking at 35% appreciation over the next 6 months. Which is, once again, I think that's very, very reasonable, especially with the slate of movies there are. I love that resistance level. I like a long on IMAX here under the strength of catalyst, under the strength of momentum, under the shift in genuine sentiment that I am hearing out there everywhere. Like a target, I think you got a good 25%, 30% of price appreciation. Look to take some resistance or start selling calls near that resistance level. I think this is an easy one. Love movie theaters. Could go Cinemark. I like IMAX here. I think there's more catching up for it to do. And going long, just going long right now. Worry about covering it at a later date.
All right. Thank you very much. Matt, you want to go next?
Yes, I always like following Mark. Let's go. Go ahead.
I was just
say.
Point,
I just had a tombstone moment. Say when.
The only thing I would say is I do remember IMAX coming up in another pick show called Trade Masters last week. So I guess we're just going to build on that. That's fine.
That's a good one.
Nothing wrong with that. Nothing wrong with that.
Listen, if it was good 3 days ago, it means it's good.
It's fair, right? It's fair. It's fair. I'm just taking shots.
The trend is your friend until it's not,
taking
right?
shots. Yeah.
Okay.
All right, Matt.
Slightly overextended, but I get it.
Oh yeah, it's terrible. But that's how hot it is.
I'll tell you though, Mark. The 9 EMA, yeah. If you want to wait for just like a flag based on this one, I would love a flag.
Oh my gosh, would I love
20.
a pullback? Oh, I would love any
flag here.
By the way, Mark,
Oh,
your picks on Trade Masters last week were on point. I mean, they really were. And this was one of them. So anyway.
you're still getting beat with a club if you get killed.
So
Don't even try.
All right, my turn. I obviously I kind of feel like there's a little bit of a theme developing, and again, I do not have the same philosophical viewpoint towards the theme building from an infrastructure perspective today as I did last year when I called that theme on. Oh man, it was election night, Tim, when I called that theme build. But I do see it beginning. I see the early beginnings of a theme emerging from an infrastructure perspective. Obviously, the economy reopening that is happening over the last 3 trading days, but I would say even more than that, Mark. IMAX has had a build up for the last 2-3 weeks now of consistent price action. You've seen the same thing happen in other economic reopening plays, and so. I'm looking at a sector here, and I'm saying, okay, what sector's tied to the theme that could develop with a positive solution to the debt situation? Everything we discussed today from a wall of worry perspective and eliminating that wall of worry over time. What could start emerging? I certainly want something tied to infrastructure. I want something tied, and whether that is, a still company like, say, Still Dynamics. And if you don't mind, Em, as I'm talking about some of these stocks, just kind of go with me on it. STLD, please. Whether you're talking about, a Still Dynamics, a Tackle 25 stock, or Cleveland Cliffs, CLF, you're looking at bottoming analysis there. I would like a little bit more time, though. I like Cleveland Cliffs at the 200-day moving average. I like Still Dynamics at the horizontal support, both showing reversal tendencies. I like that, right? But I do think we need a little bit more evidence, and maybe even to navigate the upcoming earnings reports in these two, because they can be extremely choppy and extremely volatile. I was looking at the airlines as well, and I think a lot of traders right now at Tackle Trading are looking at the airlines. And you got Jets out there. Jets was on our options report over the weekend. But if you're looking at an individual component, I was looking at American here, AAL. And again, when you're talking about trading, and I'm looking at trading here on AAL, when you're looking at that, I like the trigger above 22. I think the trigger above 22 right here makes a lot of sense. And yeah, Delta's been performing a little bit better than American, but it doesn't have a better technical setup where you could see, a drive from 22 to 24 in a fairly quick environment. You're really dealing with a little bit of a choppy, flag-based pattern, and, maybe come down a little bit. Whereas on American, it's like, I don't care what happens, just it's got to break 22. I like that analysis where it's like, I'm not waiting to navigate the choppy retracement or the flag. It can do whatever it wants. It can hang out. It can party. It can take a nap. It can go down. It can go up. It can go sideways. I don't care. It's got to break 22. I like that type of analysis. So I was looking at American there as well. I was looking, though, specifically at railroads, and it's something I was talking about last Friday in the halftime report. Brought it up with Coach Frank as well in Frank's charts. Talked a little bit about it yesterday as well. And I'm looking at those railroads right now, and you got a few of them out there, but I'm looking at UnionPacific, UNP today. Obviously, the railroads are going to be tied to any economic reopening. It's going to be tied to, and when I mean economic reopening, I'm not talking COVID data. I'm talking about economic reopening, the economy improving over time, transportation improving over time. Obviously, a $1.2 trillion infrastructure plan could have a really big kicker here for railroads as well. And when you're looking at all the different railroads out there, the one that to me had the clearest reversal type analysis was UNP, but you got a few of them out there as well. I like UNP more from a position style. I certainly see this technically as overextended, coming into some really, really big chop between two, really kind of that 213, 215 area. But once again, I'm looking at, for me, this is a little bit different. For new entry, I would be looking for a secondary pattern here, whether it's a high base or a flag coming back down to test 205. I do not like it from a directional perspective between 211 and 215. I think that's too tight of a range to justify the risk. However, looking at a secondary pattern here, maybe it's a high base that develops, maybe it's a flag that develops, but UNP on the radar, position style, fourth quarter taking advantage of the infrastructure and a theme that could be emerging. And the last thing I'll say is put that on a weekly chart, and I think you're going to like the zone around 195. So again, not looking at 211 to 215, looking for a secondary pattern there.
All right. Thank you very much. Tim, you're up.
I love both of those ideas, by the way. They're really sound, good thesis behind them. And I'm going to try to add to that and add another one here, and bring me up XLF if you can here, Emily. You know, so much of what's going to be happening over the next month is we're going to be waiting for clarity out of earnings season. One of the first groupings to get clarity out of earnings season will be the banks and the financial stocks, because they report first. You know, volatility in the last quarter, rising interest rates. In fact, if you take a peek at TNX, this tracks the 10-year yield in the market. Banks tend to benefit in those environments. They also benefit when economy reopening themes start to develop as well, because they are part of those cyclical areas of the market. Interest rates have been going up. Okay. And if we go back to the financial sector, the companies that are best set to benefit from all of this stuff kind of coming together as we move through earnings season, in my opinion, may be the banks. And one thing I love about this chart, you can pick individual companies, you bet. There's a bunch of them out there that they're showing strength and performance right now. JP Morgan, Goldman Sachs, they're pushing towards highs, those types. Bank of America, Matt highlighted yesterday, pushing towards highs. I like the ETF. It avoids the earnings season risk. One of the things Coach Frank talks about so consistently in almost any time in any market is, I hate earnings season. I hate earnings season. I hate earnings season. You want to pull earnings volatility risk out of it, play something broad-based like an ETF around XLF. And if you look at the chart on XLF, it's dialing up a very, very clear entry about above $39. You know, 39.04 was the intraday tick there on that red candle about a month ago. But here we are, one time, two times, three times, four times, building it in. We're pushing against that resistance. A breakout, running it into the upside here makes a heck of a lot of sense to me. Liquidity is there if you ever want to do anything with the options market. These are penny spreads in the options market. It is an ETF that we're watching and keep in bullish territory. It's one of our top rated ETFs. Simple trade here, Emily. Breakout above 39. You ride it to the upside, and then you figure out what to do with what you want to do with it once you reach T1 or T2. I can map those things out in my head. XLF, with the rising interest rate environment, with the cyclical areas of the market improving, and with bank earnings right in front of us, and my expectation is they're going to come in and crush it just like they did in July, I think you could see some juice here with XLF. It is my pick for the Queen's Court today.
Okay. All right. So going back to IMAX with Coach Mark. Again, Mark always brings, areas of the market that I, either have no interest in or really didn't even think about them. And he's been, spot on with, with the reopening theme. And, you've nailed Cinemark's forever and ever and ever. And so here's another one here with IMAX, which I don't even think I've ever traded IMAX, but love the pattern. Like we talked about, it's a little bit overextended, but there is room for it to continue to go up. I love it even more on the weekly, where you can see what that overhead resistance is. And once it clears this choppiness here, there's, it can, very easily get to that resistance level there. So I love it on a long-term play, which is what you were alluding to with a directional play on that. So I like this for, again, just an area of the market that I really don't have a lot of exposure to. I just really just do, companies that I like, know, and trust. So when if that's something I'm not aware of, I'm not even going to consider it. But you always seem to bring some things that I would like, no, I'm not interested. But then the way you give your thesis, and you've talked about that, talked about this for quite some time. I really like this. For me, it's a little bit overextended. I would, like we said, we would like a pullback or a high bid on it there. That 9, and this is your girlfriend, it's a little bit far away from the 9. So we would want to see it that 9 catch up to where the price is right now, either through a high base or a pullback. But absolutely love it either way. It is an inexpensive stock. You can just go and buy out the shares outright and start to do cover calls on that once it settles down. But I think for now it's pretty nice move here that we have on IMAX. So I like that one. Then we have the railroads and industrials. And yesterday in the lab, and I'll bring up XLI here, but in our lab yesterday, we talked about, this being the fourth quarter of the year. And we were having a conversation of, what if you'd had some capital that, you had allocated and you have not spent yet, maybe you had a playbook or design where, you were putting in a certain dollar amount every quarter. And, this is the final quarter. Where do you put the money? Which area of the market do you have an interest in? And we kind of went through and looked for sectors that areas in the market where they were beat up a little bit, that were below the 20, below the 50, but above the 200. And we started coming up with an idea of a plan of, what do you do once support is formed, once you see the support has formed, and if it's at the 200, even better. What we're looking at, and there was a lot of things that were in the middle, very choppy. They haven't really identified that level of support, like with financials. So when we look at financials, we were looking at this area and going, not financials, but technology, actually. We were looking at technology going, okay, we're in the middle of nowhere. We haven't formed support yet. We're that distance away from the 200, but it's not a bad time for you to start having a plan of what you're going to do when support is formed in technology. And that's an area that you have interest in. Which stocks are you going to start to look into to add to your portfolio, if that is a plan that you have for you? So we went through and looked at a couple of sectors. But we did not look at XLI because my area of interest was in technology, as it's still trying to form a level of support, looking into stuff there. But really like this area as well, because it has formed that support level at the 200-day moving average. You've gotten that nice confirmation candle here today. So you can literally go scan and find, stocks that are in this industry. And UNP is one of those, right? So you've got earnings coming up here and about on the 21st, but Matt, you're looking at a long-term, position trade on UNP. Mm-hmm. I would prefer to, like you said, either have, clear all this resistance stuff over here and then take it for a ride there. So I do like that. And again, that's just something that I would put on my watch list, because that would be an area, if this was an area that I'm interested in adding exposure, or have been looking to get into positions here that and haven't yet, and it's the fourth quarter, where do you execute whatever capital you have? So that's a pretty nice one there. And then we have financials. With earnings coming up next week, or actually, yeah, it is next week. They start next. They start next. This is, an option that you could do in turn, rather than playing the individual stocks, is looking at the ETF. And again, just waiting for the breakout. Nice, easy pattern. I like easy and simple. I don't like, complicated stuff. This is clear. You can see how many times it's tried to break out of this 39 zone. And once it clears that, that's a go. With earnings season, again, we don't know what the stocks are going to do, but like we talked about with the 10-year yield, that, that is a potential for those stocks to do well during earnings seasons. But for me, it's going to be like, I want to kind of wait and see. And I already have exposure in financials, so I'm really not looking to add anything more. And I already have a plan for the stocks that I own individually. And like, Tim talked about, you can go individual stocks, but if you do not have, if you want to avoid the whole earnings noise like Coach Frank does, the ETF is the way to go. So I really like all three areas. I like all three picks, and also in the strategies, behind them. So IMAX is long directional. UNP is position trade, and then XLF is, based off of the breakout. So really, all three really great ones, but I gotta chop somebody's head off. And I don't know who.
Fang Clan.
I can help.
Listen.
I'll give you honest advice if you want. You
Go
know
ahead.
me. I will always give honest advice.
You're not helping with my fantasy
I will-
football. That's where I need your honest advice is in
Listen,
fantasy football.
my honest
You're not
advice to
helping
you
me.
was the exact same advice I gave to myself, and I'm 1-3. So, so it was honest advice. It was just really bad advice. That's it. I think the breakout in finance is very clean. Is very clean, and I do think you got to respect that it's held up in the face of some of this volatility. Finance can be caught up in the same type of storylines, and it just didn't. And so I do think you got to be fairly impressed by that, especially with those banks, KRE with the regional banks and the major banks. And I do know they're reporting next week, and that certainly can create an increasing volatility condition. That's why XLF instead of, Bank of America or Wells Fargo or something like that, you take the more diversified approach. And again, you couple that with the breakout, right? You're not playing underneath 39, you're playing above 39. So you're waiting for that positive catalyst type environment. When you're looking at IMAX fits a very, very consistent theme in the market right now, and it's a theme that could have some legs. As we're all, I think, impressed by the attendance at movie theaters and the potential revenue streams that could come to IMAX, AMC, Cinemark, and then obviously the content providers like Disney and Paramount and so on and so forth. So I think that's been very impressive over the course of the last few weeks, and the momentum is honestly, it's increasing, not decreasing right now. And so I certainly think you could have some consistency. The UNP one, it's nasty at resistance. It is, and it's going to be a fairly difficult one. It's more of a theme, it's more of a fundamental approach, and it's more like navigating with covered calls until we do see that breakout of that 200-day moving average. And you can kind of see the IMAX scenario, right? Where you have a 3-week build that is consistent, where you can just start swing trading momentum and stuff like that. This is more the beginnings of a reversal scenario. And so you're really looking at UNP like you looked at IMAX 3 weeks ago, where it was just building. Now, obviously, we got the last 3 weeks of IMAX be like, yeah, that was very consistent. And if UNP can do that, that's beautiful and that's fantastic. But that's an if. IMAX has already achieved it. And so it for me, it's probably, honestly, it's let me fall on my sword moment and take the L on, because I do think it's a little bit more difficult given the fact that you're approaching earnings and you're approaching some key levels of resistance. I think it's much cleaner with the momentum of IMAX, and I think it's much cleaner above 39 on finance.
I am so proud of you.
I tell you, honest advice. I'm
still beating Tim down. I don't care.
I think
Tim, as always, did refer to me as Emily during Queen's Court.
So let's just kill Tim.
Let's just kill Tim. Not
on the technical analysis, not on the pick, but just for Tim being Tim.